Hey everyone, it is Evan here from the Trade Risk on Tuesday, July 17th, here with a midweek stock market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into the charts here with the SP 500 weekly time frame. That's what we're looking at right now, and you can see we are up to start off the week a little under 0.5% here in the S&P 500, and virtually all of those gains are coming from Tuesday's session. But before we go down to the daily chart, this is the weekly landscape. You can see we are closing out Tuesday. It's intra-week, of course, so the week isn't over. But when we look at this weekly candle, you can see we are at the highs of the candle at the time of this recording, and we are starting to get some follow-through, get some progress above this 2800 level in the S&P 500. We've talked about this level in the past videos, but it's significant because this is where the market has stalled out multiple times over the course of this year, and we are now finally starting to get back above it, and looks at this time like it wants to hold and continue to rally. So as it stands now on this weekly time frame, we are continuing to move higher. We are above all rising shorter term moving averages here on this weekly chart, and the next big level are the prior all-time highs up here at 2872. This is a weekly time frame, of course, so this isn't a straight line shot. I wouldn't anticipate we'd be there anytime soon, but that is the next big important level here when looking at this larger structure, and 2800 on the downside, or approximately this week's lows, are going to be the important levels to hold on to or to pay attention to going forward. Now, when we go down to the daily chart, you can see here, this was a significant day. Today's action here on Tuesday, I think, is one of those days to take notice, and it gives us as traders or as active risk managers here some upper levels or some new levels to manage risk against and to pay attention to. And what I'm referring to is essentially today's lows. The market, really the averages across the board here for the US market, opened up with a gap lower in the SP 500, the Qs right across the major averages, but we proceeded to rally immediately off of today's open. Now, the way we kind of gapped down today in the S&P 500, let's start with, was a good excuse for if this market wanted to, at this point, thrust off of this 2800 level, right? In other words, we got up to this nice 2800 psychological level over the past few sessions, and notice we had a more or less kind of a sideways session here on Friday of last week. We had another inside day yesterday and a sideways session. So a lot of indecision, just sideways movement over the past couple of trading sessions. And then we started today with that gap lower, and that gap lower again was below the prior 2 days lows. It was losing below this 2800 level, and that could have been a good excuse to just roll right over and start this, pain trade or this pullback that the bears want at this point. But we didn't get that. We got the exact opposite. We saw buyers essentially show up here right off of the open. They drove us higher all session, closed at the highs, and we engulfed the past several trading sessions in the S&P 500 and in many of the other major averages and individual sectors. So when we think about today's action, this is a bullish session here. I know volume may not be as high as some may like it, but from a price action perspective, I think we need to respect the action here that we saw out of the averages, at least for the US markets here. And going forward, the lows from today, I think, are just a great spot to measure risk against if you're a shorter to even intermediate term, but mostly on the shorter term scale. I think if we were to lose today's lows, could happen tomorrow, could happen next week, may happen a long time from now, but I think as this trend progresses to the upside, now we have a good base or a good kind of upper level momentum risk off level, if you will, going forward. That's what I'll be using. So that is approximately 2790 in the S&P 500. That is my upper level line in the sand that I'll be looking at going forward. And until and if that breaks, we have to give credit right now to the bulls. Even though there's some rotation, there are some shaky signs, or there are some at least signs that suggest that there's not a ton of momentum right now in certain groups. We still, I think, need to give the benefit of the doubt here to the bulls until proven otherwise. So that is the S&P 500, 2790 on the downside, and we have some clear sailing above us at this point in time. As we go through earnings season, do remember to check those earnings dates, and do remember that markets will be subject to those headlines as some of those companies start to come out and report and give guidance. So that is the SP 500. The Russell 2000, a little bit muted today. Didn't have as really any type of gap lower today. It essentially opened right where it closed yesterday, and it didn't quite have such an authoritative drive higher and finishing off of the highs. This sector of the market here has been cooling off as of recently. It's had a monster run this year. It's put up some nice performance. So a little digestion here is certainly not the end of the world, but it's something we want to pay attention to. It held on yesterday to this 167 level right in here, 166.50, 167. It briefly broke below it intraday, but then it closed back above it, and it held on to it today. So I think this area is a good line in the sand here. It's real close. Of course, it's right at today's lows. So that's a 70-cent move in the IWM, 0.5%. So again, real short, active, tactical level there, but I think it's a good one to hold to keep this market as pent up and as you know, consolidating and as bullish of a stance as possible. So that is the Russell 2000. I think on the highs here, again, 170 to the upside. Those are the recent highs here. And then yesterday's lows, even today's lows, is what I'd be paying attention to going forward. And the NASDAQ 100, arguably the biggest, highest sort of impact day today, was the NASDAQ 100. Notice again where we opened up. It was right here. This is a critical level. This is exactly where you would want buyers to step up. It was a gap lower and a open right at the prior all-time highs. The prior highs here from June, which we just recently broke out from and started making new highs. If this market were to roll over, if we were to see some type of failure, this is where you'd want to see it. If you're a seller, if you're a bear, you'd want to see us lose this level and continue below it. But we saw buyers show up here, drove us higher, and we engulfed the prior several days of trading. So once again here, just like the SP 500, path of least resistance is once again higher, and we have a good line in the sand, this 177 going forward, or today's lows. So that is the market environment overall for the market. I think, again, bulls have a little bit of pep in their step here into earnings season. Let's see if anything derails that. As of now, though, we are looking like this market wants higher prices. Now, if we go to some of the other major markets here, we'll go to TLT next. You can see was lower today. It is lower on the week by about 0.5% or so. And you can see, as we've talked about in past videos, this is still hanging up at the upper end of this multi-month range here. This 123, 122.75 area is resistance. It has been going back even multiple years. It was support back in 2017. We saw dip buyers step up here, and you can see the market's just reluctant. It's just hanging up at this level. So we're still waiting to see whether or not we can roll over from here and fall back into this range, or if we do get a breakout and a move back up back towards the year-to-date highs here in TLT. For now, it's just a little bit of sideways movement and some chop, and the trend in the short term does remain higher. Go to oil next. You can see was up on the session just slightly. Lots of volume coming in here today. It did reverse from slightly red levels, and USO has been beaten up over the past couple of trading days, about a week or so of trading. It's off a little over or a little under 10% from these highs here. So a little bit of a pullback in a swift fashion. It was covered, you know, a decent move there, almost 10% in just 5 or so days of trading is quite steep. Let's see if dip buyers can step in here and defend this market once again. It's been in a nice long uptrend for most of this year. I got to clean up these lines on my chart, but we have some prior inflection points currently where price is. If we were to speculate, or if we were to you know, kind of extend this trend line, which really kind of drops from my book as we based out and put some more structure in here. So we really just kind of have a looser pattern here. It is still higher in a channel that you could draw here. But for me, I'd be looking more at the horizontal levels. And right now, the June lows are down here around 13 1/4. The the May highs here at about 1470 comes in right here. That's where we broke down from on Wednesday the 11th. So this is essentially the trading range I'd be looking at. Some will look all the way up to about 1517, but it's kind of in the middle here. I'd expect some chops, see if dip buyers can step in, put in some type of pivot, some structure to make some type of higher low. But for now, it looks like just kind of a do not touch. I'm just waiting to see if a little more clarity comes around here in the oil market. And when we look at natural gas, you can see this continues to slide off ever since resolving this sideways range to the downside here a few weeks ago below 23.30. This has continued to slide lower back towards the year-to-date lows here. So sellers are in control in the short term for natural gas. And then finally is gold and metals continued to get hammered today, extending this downtrend to new year-to-date lows here. We saw an uptick in volume, 1% on the downside here. And we go to the weekly chart, you can see gold has now extended a good amount away from some of these faster moving averages. So we are extended to the downside, but that in itself is not a reason to go out there and blindly just try and catch this falling knife. If you're tactical, you might have some opportunity here as volatility is picked up, but this sellers do remain in control here as this is a structurally broken market on the short and intermediate term time frames. Silver also now finally starting to expand away and below this sideways channel that it broke down from about a month ago at this point. Actually, yeah, close to a month ago, about 2 or 3 weeks ago. Broke down, it kind of went sideways here, trying to figure out if this was going to quickly reverse this breakdown or if this was in fact going to trend lower, and we do have a answer to that. The trend is extending to the downside. Sellers remain in control, and this market would be one that I would not be looking to dip buy either or try and be a hero here. Let the market prove itself. Let it reclaim some structure, some resistance. That's the way, at least personally, I like to view markets, or at least to like to allocate towards markets. So at this point, sellers do remain in control here for silver. And that does it. That rounds out the midweek recap video covering all the major markets there. Hopefully you guys are doing well out there. Thanks so much as always for watching, tuning into these videos. You can subscribe on our YouTube channel to stay up to date every Tuesday and Friday. And with that, I will see you later this week in the weekend market recap video.